Hey, what's going on, everyone? Welcome back for another episode of Caffeine Crypto, where I welcome you to join me with your favorite caffeinated beverage of choice, coffee, energy drink, otherwise. I do have a NOS on standby, but I got some stuff to do today, so we'll use that NOS for later. For now, we're drinking some Doge Lord coffee, which you can check out, link somewhere in the description. This has been a pretty good week. As far as wins for cryptocurrency in general, obviously, as the title suggests, what people call a partial victory for Ripple. Many saw as a positive omen or indicator for cryptocurrency, hence the reason why we had a decent pump on Bitcoin leading into the weekend. Obviously, we retraced back, which is actually good. It's good to retrace. I would like to bounce off of this area here, right at that 30K. I think this is the bounce, really, if I move that line up. I think this really is the bounce, the retracement, so that way we can go ahead and push beyond this. But this 31.4, 31.3 territory has been holding us back for quite some time now, unfortunately. And you can see, we broke above it. I talked about it on Twitter. If you're not following me on Twitter, please do so. And if I said if we could sustain it, we're golden, but we couldn't sustain it. And of course, the following day, because this is on the daily, we came right back down. So Thursday was a really positive day for cryptocurrency in general, including Bitcoin. All the coins were pumping pretty good. Then we retraced on Friday, going as low as almost 29.9. It does look like we hit 29.9. And now here we are in this middle sector here at that same level that we kind of been stuck at for a hot minute. You can see it's just sideways. So it's not really too interesting to people. Really boring for the crypto community, unfortunately. But yeah, either way, still a positive victory. I mean, XRP has maintained its value. Yes, it's down 7.33% right now, but it's maintained what it jumped up from, I think, which was like 50 cents or something like that. Matter of fact, let's go ahead and take a look at XRP for some of those people who like it. Let's go against USD. Bitstamp. Yeah, look at that, guys. So 47 cents is where it was at. The victory was announced Thursday, and that bad boy jumped from around 47 cents to... Oh, what am I doing here? Get out of here. That's not the one I want. Almost 102%. Almost hitting $1. It hit 94 cents, almost 95. Retraced, just like Bitcoin and some of the other cryptocurrencies, back down to 66 cents. And now here we are at 72 right now at time of recording. Now, I hope you all had yourself a great week. Besides this is pretty much most of the news for this week. It's going to be about XRP winning, how the SEC is kind of being undercutted by the ruling or the decision, and how various cryptocurrencies had taken off. So thank you so much for stopping by, for all of my current live viewers, and for all the people who come and watch this after the fact. But let me say hello real quick. Zay Pirate, Hugo Down, Rud Puts, Fudweiser. Appreciate you guys stopping by. Fudweiser, thank you for being a member of the channel for quite a long time. By the way, those members, it's not often, but every blue moon, I will select one member to win some Bitcoin. Just some random person that is a member of the channel to win some Bitcoin. It doesn't matter what tier you're on, but I will select somebody, and I hope to select somebody soon. Maybe we might do it for Mining Disrupt, which I am attending at the end of this month. Link to Mining Disrupt tickets is in the description. I could almost save you 80 to 100 bucks if you are going using the link down there. They changed the price on me. I'm not sure if the savings are still going to be the same. But as we're getting closer, the price of these tickets have been slowly climbing up. So Bitcoin hovers near 13-month high as investors cheer Ripple ruling. Hey, Rudd, member for 5 months. Yeah, appreciate you, bud. So yeah, on July 14th, Bitcoin was hovering near the highest so far this year on Friday, after crypto investors took encouragement from a legal victory in which the cryptocurrency XRP was ruled not to be a security. A U.S. judge said on Thursday that Ripple Labs, Inc. did not violate securities laws by selling its XRP token on public exchanges. The case marks the first win for cryptocurrency company in a lawsuit brought by the SEC. Although the decision was specific to the individual case, it unleashed a wave of optimism among crypto investors that more cryptocurrencies may also be deemed securities, may not be deemed securities. And obviously, I'm not a legal professional. I'm not a politician. I'm not a regulator. I'm not anywhere in that sector. But this kind of sets a precedence, right? So this can be called upon when in court. So Coinbase, for example, who's battling the SEC, Binance, who's battling the SEC, may be able to cite various aspects of the case, of the filing, of the result, the ruling, in their future cases. So it's a positive, but obviously there still needs to be some work done. If the SEC, which brought a huge list of cryptocurrencies that they deem as security, you know, what is and what isn't is still being fought after. But this is a good one because it undercuts them, and we're gonna see in some articles here in the future that this whole enforcement situation that they're doing, that the SEC's been doing, or regulation by enforcement is what this is called, is not playing or doing any favors for them. So the enthusiasm for some of the Still, the enthusiasm for some was tempered, talking about various cryptocurrencies, by a report from the Wall Street Journal that Binance, the world's largest cryptocurrency exchange, has laid off more than 1,000 people. We were going to talk about that later as well. Coinbase also announced Friday that it would limit its crypto staking services for retail customers in California, New Jersey, South Carolina, Wisconsin, pending proceedings several states initiated against the exchange last month. And these states initiated these after the SEC publicly, announced, first they got the Wells notice, but then they were actually getting sued. So how are these states going to, I guess, work? And by the way, I am looking for a KS0, but I am not going to spend the money for it. I've been trying to work with Ice River and a number of different manufacturers, but no dice. There's a couple things that I would like to do with it. First, get rid of this external case, and that's going to be about what I tell you. But I doubt that anybody is going to let me have that device so I can create some content. Plus, there's plenty of content out there already on it. A number of people have got the device. Congratulations for your 100 giga hash and how much you're making per day. We'll see how things pan out as more and more KS3s, KS2s, KS1s enter the wild, increasing the Caspa hash rate and difficulty, while the emission schedule reduces the amount of Caspa 1 every 24 hours. I still think Caspa will be fine. Personally, I know a lot of FUD was spread regarding the ASICs coming online for Caspa, but I think it'll still be fine. Caspa doing a really good job, again, of pushing through, marketing, developing, upgrading, improving. The devs are pretty good from what I researched and what we already know about some of them. So I think it's still going to be a positive. Moving on, Bitcoin hit its highest price since June 22nd, or 2022 earlier, touching 31.8K before edging down to the trade around the 30,000 area, which is where we are right now. The second biggest token, Ether, had its best season since March on Thursday, and XRP, which is the U.S. judge ruled, could be legally sold on public crypto exchanges, soaring 73% on Thursday and held most of its gains on Friday. The regulatory environment is changing, says Matthew Dibb, Chief Investment Officer of crypto asset manager Astronaut Capital. And by what we have seen in the past 24 hours, or the last 24 hours, it could be for the better. Obviously, we had a number of various individuals coming out from the woodworks and speaking upon the issue. We have another one here from, I think, Justin. Ripple stakeholders were waiting for some regulatory clarity. Yesterday, the court seems to have provided just that. Following the decision, several major cryptocurrency exchanges, including Coinbase and Bitstamp, resumed trading of XRP on their platforms. And I saw that as well, obviously commenting and tweeting on it. After having suspended trading of the token in 2021 due to the SEC lawsuit. And again, if Coinbase did that because of the SEC's action, they removed XRP from being traded on their platform because you know, the SEC was saying it's a security. If the SEC would have said, hey, this is security, they would stop you allowing that token to be traded, right? They don't want to do anything illegal. They don't want to do anything that the regulators don't find fit. This is the whole problem with the current SEC situation with their enforcement through action or regulation through enforcement is you didn't set the terms. You say that Howey Test tells you what is a security and what's not, but there needs to be some extra clarity, right? There needs to be a defined line in the sand. I mentioned this many times, and there wasn't, because if they did confirm that XYZ currency was a security, then Coinbase and various exchanges wouldn't let it be traded, right? They don't want to violate securities laws or anything like that. So yeah, we'll see how things go. But Coinbase, which was sued by the SEC last month for alleged securities law violations, says its shares surged nearly 25% on Thursday. So not only is cryptocurrency had a nice little day on Thursday, but the various stocks and even the S&P 500 did pretty good. So this is going to be a gradual thing as we move forward into this crypto world. I still think it's early, personally, just an opinion, not financial advice. I still think it's early. So if you haven't got into the crypto game, you haven't got into mining, you haven't got into trading, DeFi, Web3, I still think there's plenty of opportunity for everyone, right? We don't have to go in there and compete with one another for the best toy. It's okay. You can share. And I still think that there's some opportunities there for various individuals to build a better future for themselves. I'm not going to rely on various government organizations, agencies, plans, programs, whatever for my future. I'm going to take my future into my own hands and try to build something for my family. So, summary, I think it's still early, but it's a lot of craziness. And this craziness, especially as we see here, the mentioning of FTX and stuff like that, the past history of crypto, the scams of crypto, how easily one can fall for these scams and lose all of the assets that they built over years, is very discouraging, right? So that's where the other elements come into play, like the ETFs. That's why such positive news are being met with such positivity. Thank you, Crypto Mikkel, for coming over with the raid. Appreciate you guys stopping by. What's up, DJ Mines? Appreciate you, bud. Throwing the 22s in chat. Automatic Beats. Seb, how you doing, Seb? Aru, how you doing? We are at a crucial point, says Aru, in the proof of work market, where you got to choose ASICs over GPUs. So you don't have to choose ASICs over GPUs, but you can rebalance. You know, as I mentioned during, you know, we had the Ethereum miner meeting where I brought a large group of us in the crypto mining scene together to talk about the ETH merge, the future, blah, blah, blah. I have another one planned, but will only be a handful of individuals. It's already been scheduled, so you're just going to have to bear with me. But you will be updated on that. What I said after the ETH merge was you got to reevaluate, right? What is your strategy? What is your current strategy? And that's where a lot of people took advantage of the situation, right? We were before the ETH merge or before the price drop and GPU profitability per 24 hours, week, month. A lot of people were taking advantage of the situation with the high demand, low supply, and selling their older GPUs at those stupid prices. But people were paying for them. I feel bad for the individuals buying them. Hopefully they were gamers that just needed one and put in their system. If you bought an entire rig of 3060 Ti's, 3070s at $1,200 to $1,000 a pop, I feel bad for you because right now those prices are a lot lower. Unfortunately, some GPUs are at MSRP, but if you look at the secondhand market, you can get some pretty good deals. I mentioned that in a short the other day, and I try to keep, if I see a good deal, I will post it on my Twitter, so let me know. But there is, Aru, you are correct. There's this point right now where do I go ASIC or do I go GPUs? Why not both? Why not ASIC, FPGAs, and GPUs? Have a nice mix, right? Diversifying your hardware so that way you can focus on various cryptocurrencies that you're interested in. Obviously, the ASICs are very dependent upon, you know, they can only focus on one thing, very specialized. So if you want to focus on Bitcoin, focus on Bitcoin. You might get an ASIC that isn't as profitable to mine Bitcoin, but you're still getting Bitcoin. Script, right? The L7s, different variations, still pretty good, and some are profitable. It's only a couple bucks a day, maybe $3-4 a day, but still profitable. There's new miners coming out, obviously Caspa. So a lot of people probably sold their GPUs and got a pre-ordered a KS3, KS2, KS0, whatever. And so that's paying off for them. And they're making pretty good right now if they have those devices. But not everybody has those devices. So we still have yet to feel the full force of the ASIC. We've been slowly watching the hash rate, or excuse me, the difficulty and the hash rate of Caspa climb up. But it's not to a point to where I'm looking at, which is the 10 petahash or higher mark. So I'm not really concerned whatsoever. Now, if we were to jump, 50 petahash like that, because some large operation kicked on all their KS3s, then I would be concerned, especially if Caspa and the devs and the team didn't continue, upping their game, continuing to market, continue to improve, continue to build. But they're doing that. So I still think Caspa is a good cryptocurrency, not financial advice, to monitor, have a bag of, mine long term. I'm looking at the long term picture, not the short term picture. But then, you got that on the ASIC side. FPGAs, you're a little bit more versatile, right? You're reliant on bit streams for other developers, but there's been a lot of changes. As a matter of fact, if you follow the channel, I have an update for you. Rapid mining already gave you guys some information about that. And then GPUs, I have a feeling that GPU mining is still going to be relevant. CPU mining is doing pretty good right now. So there you go. Couple CPU miners, a couple GPU rigs, a couple of ASICs, a couple FPGAs, boom, you're diversified. You're getting different assets, different classes, and don't forget that you can mine a particular type of cryptocurrency or whatever's the most profitable for your hardware and get paid out in something else. So if you want to stack some SHIB, you want to stack some ADA, you want to stack some BNB or whatever, you can do that. You can mine a currency and get paid out in another one because you believe in it long term or maybe in the short term. Maybe you believe this asset's going to blow up, so you're stacking it. But that's the whole speculation mining game that we're playing, right? This is all spec mining. The only thing that isn't spec mining is what? Bitcoin, Litecoin, and Doge. Really, that's pretty much it. Everything else is you're trying to stack as much as possible because you believe the product's going to do well. And if the product doesn't do well, you still got the cryptocurrency. It's just not going to be valued at anything at that time. Now, you go on to say below that, which is sad, because it should be the other way around. In fact, there should be ASIC resistant algos. Correct. We talked about this in the past as well. But the chains need that. They want the security, right? If you have the increased hash rate, you have improved network security. You can, transactions are always going to be confirmed. The network's the more decentralized, right? If I allow ASICs on, if I can make an algorithm that will be fair to ASICs, FPGAs, GPUs, CPUs, to where everybody's getting a nice piece of the pie, everybody's happy, they want to continue to mine on the network, but not one side gets dominance over the other, then great. But that's in a perfect world that we're not in. But I do agree. What's up, Yeti? Thank you for stopping by. Appreciate you. Aru, I completely understand. I agree with you. So, moving on, and by the way, thank you for stopping by the Beginner's Block. I do not have an article today, but check out the Beginner's Block. Link is in the description. Always coming out with different articles, and sometimes some of these articles are featured on the channel. Hey, the Nord Cloud line. I was just talking to a couple people about that. Good stuff. But yeah, the Beginner's Block link is in the description. The next biggest thing that really kind of went around the crypto Twitter, I guess you could say, is Alex Masinski, the founder of bankrupt crypto lender Celsius, was charged with fraud, misleading the customers, and artificially inflating the value of the company's token, according to the U.S. indictment unsealed on Thursday. He pled not guilty at the time, because I think he did plead guilty to fraud. If we fast forward here in a couple of articles, but that was the next biggest thing, is that the suit against Alex and then arrested. Coinbase, saw their shares increase along with a number of other currencies, as well as the S&P 500 had a nice little uptick on Thursday. And then Binance laying off additional, another 1,000 people. So positive news, Ripple's case 100% is positive. But that's pretty much the top things this week is the Ripple file, the Ripple court case, Alex Mashinsky or Celsius CEO being arrested, Binance laying off more people, and there's a couple other things, but they're not as big, right? So XRP gained 66%, as you saw from the chart that we did earlier. XRP almost got 102% when everything was said and done. So some of these stories probably came out before that, but XRP has bypassed Binance, or did. Okay, so it dropped back down. XRP did bypass Binance or BNB for the number 4 coin, which is very interesting to me. You could tell things have switched over. It looks like they dropped down from below 40, what is that? Thousands, millions, billions. So from below 39 billion back down to 37 billion. It's almost at 38 billion. So it's 1 billion off from BNB. I bet you CZ didn't like that, so he had to go and pump the price. But yeah. And the XRP army is strong. I don't personally have a bag of XRP. I used to. But, you know, I appreciate what the XRP team has done as far as pushing the crypto industry, and especially with this court case that they've been battling for quite some time. So, you know, to spend so much time and effort on this and to have a ruling kind of go your way, and again, people are calling it partial victory, I think is a huge win. I really do think is a huge win. Speaking of which, a big deal. Crypto braced for a $30 trillion earthquake after Bitcoin, Ethereum, BNB, XRP, Cardano, Dogecoin, Litecoin, Solana, Tron, and Polygon price boom. Why don't you just put every cryptocurrency on there? Like, what kind of title is that? Like, come on, Forbes. Come on. Anyways, we saw, yep, all the various prices climb up since the crash back in the 2022. Now, Elon Musk surprised traders with a bullish crypto prediction. Bitcoin and crypto are braced for $30 billion trillion worth capital hitting from the market if any one of the recent flurry of U.S. spot exchanges or ETFs filings are approved by the SEC. And speaking of which, we do have an update on that as well. People are taking victory laps still from that win that we talked about earlier. But let's turn to the viewers of the channel and ask them. We're going to do a quick poll real fast. Let's see here. Do you consider the XRP ruling a victory for crypto overall? Question mark. Yes, no, and of course for some people that don't want to answer or maybe don't know, they can have that option as well. So we're going to add that right now. Please, I didn't mean to add an option. How do I post it? Don't pick this one. I don't know. I hit add an option by accident. It wouldn't let me post it. So don't do the fourth one. We only got 3 choices. Yes, no, don't know. Please comment. Dynex favors GPUs. Super low. Yes. There are some cryptocurrencies or cryptocurrency projects that support GPU miners and GPU miners only, or maybe the smaller at-home miners only, compared to larger operations or other cryptocurrencies who need the ASIC hash rate security, stuff like that. Moving on to the ETFs, Bitcoin filings, all that good stuff. BlackRock has a responsibility to democratize investing, including crypto, says Larry Fink, obviously talking about BlackRock. And this announcement and this information really kind of, again, his presence on these news websites or news outlets is just drumming up more interest into crypto. Like, people are hungry. They're on the sidelines. They want to get in. They don't want to be their own custodian of their own financial assets. They just want to Put it in an ETF and let it grow. That's what they want. They want the easy way. They don't want the hard way. They don't want to participate in anything. They don't want to vote on stuff. They don't want to do any of that. They just want access and availability to these assets. And these Bitcoin ETFs are going to offer that. And you could technically, not financial advice, when we're talking about other financial ETFs, you could make money, passive income over time with these ETFs. So I could see why it could be attractive, and all those people on the sidelines hungry to get in will have that opportunity. Because if we look at an article that I have here, looks like we got some tweets that the SEC did acknowledge the Bitcoin ETF applications from BlackRock, VanEck, Invesco, Galaxy Digital, Fidelity, and Wisdom Tree funds. Keep in mind that ARK invested in 21 shares already beyond this point, and Bitwise Invest was yesterday. So we got a lot of ETFs coming to market. BlackRock being one of the biggest and Fidelity being one of the biggest. I have a feeling a lot of people will flock to them. But VanEck is also pretty good. Invesco, Wisdom Tree. These are large financial institutions. And people want to get in, man. So we'll see how things go. Continue voting on that poll for me real quick on whether or not you think XRP or Ripple's ruling is a huge victory for crypto. Yes, no, or I do not know. But on Squawk Box, once again, Larry Fink goes on to say, we believe we have a responsibility to democratize investing. We've done a great job in the role of the ETF in the world is transforming investing, and we are only at the beginning of that. BlackRock originally applied for this ETF on June 15th, which appeared to spur a rally in cryptocurrency and a flurry of similar filings from other asset managers. The initial filing from the iShares Bitcoin Trust did not include the management fee. Looks like Fink says, we are working with our regulators because, as in any new market, if BlackRock's name is going to be on it, we're going to make sure that it's safe and sound and protected. Now, let me bring you guys back. Okay. I understand BlackRock's big. They have a lot of power. They usually get what they want. Blah, blah, blah. The whole reason why Bitcoin was created was because there was too much trust in the central organizations, the central banks, right? If you needed your money and crap hit the fan, you wouldn't be able to get your money because the bank doesn't really store your money on site. It's just a bunch of numbers on some digital ledger that they supposedly secure, and they oftentimes get hacked themselves. So this is one of the biggest concerns, or one of the biggest problems that people have with Bitcoin ETFs, right? Is again, now we gotta have all of this trust and all of this responsibility placed on these centralized organizations who have failed us before. Not saying BlackRock failed us before, but just the general banking industry, financial institutions have failed us before. We've seen the bank collapses many times. We even had some earlier this year, which spurred some concern. But again, the money that would inflow through these ETFs could be a very positive thing for Bitcoin as a whole, or cryptocurrency as a whole. But we just have to wait and see. It's really about the top players or the people that are creating these firms, whether it's VanEck, BlackRock, whoever they are, doing things correctly and not messing it up and not screwing over the end user, not screwing over the blue collar worker that works their butt off in the construction site, trying to save for their family, living paycheck to paycheck to try to build something new for the future. As long as that individual, the hardworking mom, the hardworking teacher that is barely making it, but is doing everything they can, they're taking every little ounce of their savings and putting it into a crypto asset because they believe in it, or an ETF because they believe in it, or a stock because they believe in it, and the company or organization, drops the ball because somebody wanted to buy too many yachts and files bankruptcy. That type of shit is the shit that pisses me off. Like, too many times have people done wrong things and gotten away with it, but if you and I were to do it, we'd be in jail or worse. But anyways, this is an opinion piece. I do not have any articles linked in today's video. I'm not really going to worry about it. Just spouting nonsense. Really, I'm just a guy on the internet. But I do know how to do some TA, and I do have some sense of the crypto industry. I've been in it for quite some damn time. Not looking to retire anytime soon. But this opinion piece says that could the Ripple ruling spell the end of regulation by enforcement? They didn't really have a good response to the whole XRP ruling. They didn't have what people found as an adequate response to the situation or to the actual ruling. But the SEC recently had a no good, very bad day because of the district judge ruling in the SEC's actions against Ripple. Despite the issuing statement filed with bravado and the kind of detachment from reality that might make even Donald Trump think twice before pressing send, the SEC likely knows how serious of a rebuke its overall approach to the crypto received in federal court. If the ruling holds, we may be witnessing the beginning of the end of the SEC chair, Gary Gensler's regulation by enforcement approach to crypto assets. And the end will be messy for those who oppose crypto. Now, again, remember, this is an opinion piece by the article writer on CoinDesk. Who could have seen this coming? It was entirely predictable to many, except for a tiny cauldron of activists in Washington, D.C., who adopt the view that all tokens are securities with religious fervor. Again, opinion piece. There's going to be some terminology in here that probably don't agree with. But while the SEC will most assuredly appeal to the district court decision, action in the courts will take months and are merely a sideshow to the larger reality, namely the district court ruling. And with great timing, as the policy debate in Congress is advancing their legislation to put a regulatory framework around crypto assets, John Russo, the Senior Vice President for Public Affairs at Clyde Group and former spokesperson of the U.S. Department of Treasury, was there a quote? To understand why the policy, blah, blah, blah. Where's the quote? You gave me his name. Okay, so that was the one that said all that. Okay. To understand the policy, yada, 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 to desire to become crypto. Okay, your opinion's getting stupid now. Ironically, with the district court's ruling ramming a hole through the SEC and the anti-crypto crowd strategy, crypto opposers may be forced to accept the legislative agreement more permissively to crypto assets than would have been enacted during the previous Congress, one which Democrats controlled. Instead of regulatory framework for crypto assets designed and passed by a Democratic Congress and implemented by Democratic administration, Democrats may be forced to accept an agreement drafted by the congressional Republicans on the House Financial Services Committee, with the SEC and the anti-crypto Democrats deprived of the argument that their legal cases were sound. There's nothing to stop the acceleration of efforts to cinch a bipartisan agreement on regulatory framework of crypto assets. You're using a lot of political terms in your opinion piece there, Mr. John Rizzo. You need to chill out. I don't know if that was a lizard or if that's my package. That might be my package. I'm expecting some stuff. By the way, I got some personal updates, but I haven't posted anything about it. Car related, obviously. But I'm probably going to put it on the SerpentX media channel. And you could go and follow that if you want. I still got to post the video. I still got to post the, my son probably got it. I still got to post a video for when I went down to go see a couple of guys down in South Florida where I was driving the A91. So I might post that. It's not a proper car review or anything like that, but anything personal, I'm going to post on that channel if you're interested. I do want to see what the hell that was, though. But my son would have came and got me if he needed to. So the SEC strategy for regulating crypto stumbles as Ripple case. It's basically the long and short of it. You know, the SEC acknowledging the ETFs, the Bitcoin ETFs, is a positive as well. XR price, you know, can it hit $1? It almost hit $1. It hit 94 cents. But can it hit $1 and sustain? Obviously, we're pulling back right now. But if XRP can sustain this 70-cent level, as we lead into the next bull run, I definitely can see XRP hitting that $1. Now, I'm not saying it's a guarantee. This isn't financial advice. I'm just saying if it holds at 70, right, it doesn't retrace back down to the 47, 48 cents that it was at prior to the ruling, I definitely can see as the next bull run takes off, XRP getting above $1 for sure. And again, it's not a guarantee. I'm just spouting nonsense and not financial advice. I keep saying that, but you got to be careful in this world, man, because a lot of people make guarantees they can't freaking back up. We talked about this earlier. The founder, the founder of crypto lender Celsius Network pleads not guilty to fraud charges. Okay, he pled not guilty. Okay. That was on Thursday, that he misled customers and artificially inflated the value of his company proprietary crypto token, Celsius or Cell. 3 federal agencies also sued Mazinski and Celsius in connection with the case. Mashinsky was charged with several criminal counts, including securities fraud, commodities fraud, wire fraud, but it doesn't go on with the others. According to the indictment and sealed on Thursday, I'm pretty sure we can go find that if we really wanted to, but I don't care. He is one of several crypto moguls who to be indicted in another blow to the industry, which is undergoing a reckoning after a slump in crypto prices led to the collapse of several companies, including the exchange giant FTX. So we all know about that. It looks like the U.S. magistrate judge, Anna Wang, has said he would be, or Anna Wang. Anand Wang? I don't know. Sorry, my apologies, sir. Said that he would be released, or ma'am. I'm so sorry. Okay, so the judge is saying that he would be released. So Alex would be released on a $40 million bond secured by his Manhattan residence. What? So just like FTX, they get out on a bond. Do they have like an ankle bracelet like FTX or SBF? Oh my goodness, man. Come on. Whether it's old school fraud or some new school crypto scheme, it doesn't matter one bit. It's all fraud to the U.S. U.S. Attorney Damon Williams said in a press conference detailing the charges. We know about when it was founded. So it was founded in 2017. It was basically a Ponzi scheme. He used new money to pay old money, take from Peter to pay Paul. And yeah, so he got arrested. It's one of the other bigger news. We'll watch this video towards the end of our stream here. Moving on to Binance, reportedly lays off 1,000 employees as top crypto exchange grapples with the SEC lawsuit and looming DOJ investigation. Obviously, Binance, we've been talking about them for some time now. They've been going through some trouble, obviously having issues in various countries or various entities and government agencies really dropping the hammer on them, being aggressive. You know, Australia, what was it? I believe it was Norway or Norwegian, Belgium, obviously here in the U.S. with the SEC. So not a lot of things going their way, but they are still the top cryptocurrency exchange out there, period. They're still number one, blowing Coinbase out of the water with, let's see, that's millions, billions. So that's 10 billion in trading volume. And then Coinbase is only almost 1.5 billion in trading volume, 24-hour trading volume. So definitely Binance has that more global or international reach. But look at the number of visits, weekly visits. This is a stat saying that it's the website, not the mobile app, based on similar data from similar web. The scores here are ranked by a number of metrics based upon web traffic, average liquidity volume, as well as confidence that the volume reported by the exchange is legitimate. Weights are assigned to the above mentioned factors, a score from 0 to 10, and is given a Spox exchange. So Binance is at 9.9, Coinbase is at 8.6, Kraken 8.1. I don't think anybody has a real 10. And I know this score is to try to help us feel a little bit more confident in those exchanges, but I'm not sure if anybody's ever posted the actual liabilities, right? Yeah, we got proof of, your assets, but what's your liabilities? What are you on the hook for? So Binance still working it. I think they'll be fine. I think they'll be fine. Let's go ahead and end this poll real quick. The question was, do you consider the XRP ruling for crypto a victory for crypto overall? 86% said yes, 9% says no, 4% says don't know, and thank you for not picking the last one that I messed up on that I didn't mean to add. But alleged crook, SBF, and this is an article, opinion piece again, asked judge to allow close friends to visit. Oh, Sam, are you missing your friends? Poor guy. I feel so bad for him. He's missing his friends. Shut the fuck up, bro. Get the fuck out of here. You can have one friend. Okay, maybe two. That's it. But no ice cream. Sorry. Anyways, crypto lender Geist, Finance? I don't know. Anyways, never heard of this lender. Not sure if you've used it or anything like that, but crypto lender Geist Finance shuts down permanently over multi-chain hack. Looks like there was a multi-chain hack. It looks like it's shutting down due to permanent losses from a multi-chain exploit. According to July 14th social media post from the app's development team, Geist contracts were paused on July 6th, then resumed in withdraw and repay only mode on July 9th. The latest post confirms the team does not plan to reopen lending and borrowing on Geist. After confirmation from Multichain that the funds will not be recovered, we are announcing that Geist will not reopen. Because Chainlink oracles are tracking the value of USDC, USDT, WBTC, and ETH, they are not aware of the real value of multi-chain assets. Very interesting. So there was another exploit. It's a lending, this particular entity is a lending protocol running on the Phantom network. It had over 29 million worth of crypto assets locked in its contracts before the multi-chain hack. And before the hack, Geist allowed users to borrow, lend, or use bridge tokens from the multi-chain platform as collateral, including bridge versions of USDC, Tether, Bitcoin, and Ethereum. It used Chainlink oracles to track the price of these assets to determine their collateral and loan values. According to the post, these oracles have stopped producing reliable information. They are now listing the values of the non-bridged or real versions of each coin, which are more than 4 times the value of the multi-chain derivatives, as the team explained. We've seen this before. Remember when Kyberlink supported Ethereum proof of work, or ETHW? Remember the coins on the ETHW network or chain, the valuation of those coins were completely different than the valuations of the real assets. And so when they approved it, you know, you could take your ETHW that you got because you were holding ETH, and you could exchange it and get like $10 million worth of Bitcoin. But then you couldn't do anything with it because they were a different contract address. They weren't tied to the real asset. So we've seen stuff like this before, but it looks like because it's not providing reliable real-time data of the chain it was on, it was using numbers from the real asset, obviously causing issues. So this makes it impossible to re-enable lending, as doing so will result in bad debt of holders non-multi-chain coins such as Magic Internet Money, MIM, or Phantom. The team stated as a result, Geist will not be reopening. The team clarified it's not blaming Chainlink oracles for the closure, but as these oracles did work as they should. Instead, nobody's to blame except for multi-chain org here. Interesting. Blockchain analytics expert first reported the multi-chain hack on July 7th. Over 100 million have been withdrawn from the Ethereum side of multi-chain bridges, including those for Dogechain, Phantom, Moonriver. The multi-chain team called transactions abnormal and warned users to stop using the protocol. However, the team stopped short of calling it a hack or an exploit. On July 11th, on-chain sleuth and Twitter user Spreak reported that an unknown individual was draining funds from the protocol and sending them to the fresh wallet addresses using a fee-based exploit. Interesting. Then later on, the multi-chain team confirmed the withdrawals from July 7th had been the result of a hack. The network had been storing all shards of its private keys in a cloud server account. Fucking idiots. Under the sole control of the team CEO, who was arrested by the Chinese authorities. The cloud server account was later accessed by someone and used to drain funds from the protocol. The team previously stated in protocol's documents that no single server had access to any of those shards of keys. The July 11th fee-based attack was a counter-exploit initiated by the CEO's sister on the behest of the multi-chain team in an attempt to recover funds. The sister was later arrested, and the status of the assets she recovered is uncertain. Oh, damn. Wow. That's good stuff. Now, that's what I call a good drama, baby. That's what I call a good drama. Thank you. What do we got here? Anything you can do, Chump can do better. Chump's always been better. I don't know who you're talking to. You're talking to me or you're talking to somebody else. AI signals versus human intuition, decision making, and crypto trading. I don't know. This is just a popular debate between AI and humans. I mean, AI are good at some things, and humans are good at others. You still can't get AI to make a decision on whether or not they should save that child or kill that terrorist. That takes intuition, wisdom, understanding, experience, expertise. That takes a lot of emotional factors to make a decision like that, or possibly think your way out of it in a rational amount of time. Whereas the AI would just be like, boom, boom. I mean, the terrorist is dead. Yeah, but you killed a kid in the process, dude. Like, come on. But things are getting better. It looks like emotional or AI is getting better, but this isn't what that's about. This is about AI signals versus human intuition as far as trading, crypto trading. There's a lot of algo bots out there. If you haven't seen it already, I've done some number of videos on 3 commas and algo bot trading. Obviously, a lot of people are utilizing AI to initiate trades. Some of it are behind closed doors with some really good stuff or really good protocols or configuration that they have set up. And some of it is more open, but you're going to have to spend hundreds of dollars on the access and capabilities and stuff like that. But it's very interesting how, this AIs are initiating or completing these trades. Whether it's shorting when it's the right time to short, or longing when it's the right time to long. It's definitely a nice little game here between the humans and the AI. But I really don't care. Sorry. Like, I'm happy for AI. I'm looking forward to quantum computing. I'm looking forward to fusion technology. I'm looking forward to a lot of new stuff coming down the pipeline. AI, cool, whatever. ChatGPT. Automated AI created images, deep fakes, whatever, cool, but it's not something that I'm super excited about. And they need to be careful with AI. Not saying that Skynet's going to happen, but some idiot does something wrong and Skynet will happen. So anyways, we're going to wrap up this live stream. Thank you so much for stopping by. What's up, D Miners, Magic Lucky? Did you know Deep Miners now has a DK stratum? Do they? Let's go to miningpoolstat.stream. Donex, and thank you for the $50 DKK. So deepminers.com, pool managed by my friends, my colleagues, my boys, now has a DK stratum. Let's see here. Get started. Yeah. Boom. That's cool. Good stuff. So I'm going to link this in the live chat for you guys. And this is a good pool. It's number 5 right now, but we can easily make that number 4, guys. We could easily make that number 4. It's got a low fee compared to some of the other pools. Obviously, P1 Pool is trying to compete with it, but it's managed by somebody that I personally have a good working relationship with, and I personally trust. There's always going to be issues with pools, especially when you're doing with Dynex, because Dynex is very hard to maintain, especially with the updates and what's going on. It's not, you know, you can't just go to freaking some Joe Schmo and be like, hey, set me up a pool, and then it's set up. No, there's a lot of work that goes into it. It's not like some of the other cryptocurrencies where you could just download a template, set up some pool addresses, or you know, set up some various cryptocurrencies of pools, and you're done. No, Dynex requires a lot more. Casper requires a lot more. So, and there's some other cryptocurrencies that require some actual effort and time. And it takes a lot of time out of their lives. So they're not really making money. Pool operators are not making money. They're not making life-changing money that's to where they can just be a pool operator and that's it. They're not. So if you think these pool operators with their 1% fees, 0.5% fees, 0.8% fees is living the good life, they're not. They might have another job, a life, a family, and all kinds of stuff, and they're just doing this on the side, allowing you the opportunity to mine on their pool. So give them some support. Help them out. But check that out. Pool.deepminers.com. It's growing pretty good. They are in support of the vote to have the hash rate on each pool limited. I talked about that in a previous video. If you haven't checked that out, look at my channel. And make sure you are active and in support of the community. But that's going to do it for today's show. I'm going to play this video on our way out into Red Panda Mining stream. I got some work to do. I got some driving around to do. I will bring you guys an update regarding the vehicle my family had landed on since being, you know, losing the Toyota Camry after we were T-boned on the way to college, or while my son was driving to school and with me in it. You guys, if you follow me on Twitter, you know what happened. You know how deep the truck went into the car and how grateful me and my son are okay. But I'll have those updates for you on the secondary channel, SerpentX Media. And we're going to wait for Red Panda to go live here in a little bit. Until then, let me go ahead and play this news piece. And if you have any questions while we're wrapping up, please send me a super chat or at me. And I will get back to you. You're very welcome, Yeti. And anything you can do, Chump can do better. I understand. I know. I just like reading your name. I got your message. And yeah, there we go. DJ Mines, insurance getting y'all a new car. So insurance helped out DJ, but it didn't cover it. So the cost of cars are just super stupid expensive. A 2006, maybe 5 Civic, that should probably be around $3,500, maybe less or more, depending on the quality, the paint, the insides. It's like 7-8 grand. A 2012 like Camry should be, you know, maybe like 5, 6. It's going like 10, 11, 12. Like, it was completely stupid. But I did some hunting. We went driving around. I did a lot of looking online, and I found something. There's some work to be done, and I will have that updates for you on, again, the secondary channel called SerpentX Media, because I don't want to confuse the two. This channel is a lot growing. I might link to it or post about it, but SerpentX Media doesn't have a lot of subscribers, and I'll post my, like, there's actually, I got a racing video on here, and I have some other races I might post on there as well, because, you know, the statute of limitations has fallen off by now. So SerpentX Media, sometimes I post videos on there that are the same because I want to compare, because I feel like my channel is sometimes blacklisted ever since I got shadow banned, even though YouTube doesn't want to call it a shadow ban, and I compare like the views. But yeah, that's a secondary channel. Please subscribe if you're interested. I'll try to post updates, and if anything, I'll post updates on Twitter, so follow me there, and I'll link to whatever the video is hosted on. All right, so let me play this. Let me go see what that knock on the door was, make sure if it was my package or anything, because I got some steel braided brake lines on the way, plus some, you know, oil and the basic essentials, Craftsman torque, oh my god, torque bar, no, torque wrench. So yeah, let me pause this. I keep forgetting there's always a freaking ad. Always a freaking ad. Always a freaking ad. I do always say we're racing in Mexico. I do always say that.
XRP is deemed not necessarily a security. Former Celsius CEO Alex Mashinsky pleads not guilty in federal court and faces a $40 million bond. Plus, EtherFi's CEO breaks down the protocol's new NFT collection backed by staked ETH. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Major cryptocurrencies extended gains this morning following a sharp rally fueled by yesterday's ruling that Ripple's XRP is a security in some cases, but not in others. In the past 24 hours, Bitcoin traded above $31,200 and Ether hovered under $2,000. Then there's XRP, which rocketed 32% to trade at 78 cents.
What do you mean no YouTube Premium? What is that? I know you can, like it's a small, the secondary channel is too small. I don't think I can apply for it, can I? DJ? You talk about YouTube Premium.
Cryptocurrencies broadly are on pace for a winning week. Bitcoin is up nearly 3% for the week, and Ether is looking at a more than 6% gain. Altcoins in particular were in rally mode this week, led by XRP, with Polygon jumping 25% and Solana popping 32%. Coinbase's stock even got in on the action, rallying as much as 40% just on Thursday. Okay, let's talk about the top stories. As Coinbase's stock swings in response to that ruling between the SEC and Ripple, the exchange's chief legal officer thinks its argument in its own legal battle with the agency is strengthening.
Okay, I got you. Thank you, bud.
In an interview with CNBC International, Coinbase's Paul Grewal said that the ruling that XRP is not necessarily.
By the way, getting ready for seasons, I got all the statues of Lilith and the Map Explorer.
For tokens that are listed on exchanges for regular investors, there's no question that this ruling strikes a blow to the idea that somehow securities are being traded when people go onto exchanges and trade the assets. I thought we would win before this decision. We think this decision has only further strengthened the case. And the reason is this was not just a casual opinion offered as part of a much wider dispute. This was an opinion that focused on the key issue in our case and in many other cases, which is, are these tokens, when they are traded on exchanges, securities transactions within the meaning of U.S. law?
Coinbase and the SEC held their first hearing in court on Thursday over whether the exchange listed unregistered securities on its platform. Next, former Celsius CEO Alex Mashinsky pleaded not guilty to federal charges on Thursday. Mashinsky faces 7 criminal counts, including securities, commodities, and wire fraud. His bail was set at $40 million, and his travel has been restricted. In the indictment, federal prosecutors claimed Mashinsky misrepresented the safety of Celsius's yield-bearing products and the company's profitability. In a statement to CNBC on Thursday, Mashinsky's attorney said, quote, "Alex vehemently denies the allegations brought today. He looks forward to vigorously defending himself in court against these baseless claims."
What's the word? Why do people keep using the word baseless? Like, come on, man. What do you mean baseless claims? Bro, you're whatever. Anyways, you will be automatically redirected to Red Panda Mining. That is coming on next as soon as he goes live.
We also told you yesterday about a separate legal action against Celsius. The exchange was ordered to pay $4.7 billion to regulators over a scheme to defraud investors, one of the largest fines in the FTC's history. Now, in a court filing on Thursday, Celsius emphasized that the agreement reached with regulators would not affect its restructuring plan with Fahrenheit, the consortium meant to take over the business. Settlement with the FTC will be paid after the company returns funds to customers. All right, on to our main story. This week, liquid staking protocol EtherFi dropped what it calls the first ever NFT collection backed by staked ETH. So Crypto World's Talia Kaplan spoke with the platform's CEO to find out how it works and what prompted the move at a time when total NFT market trading volume is down.
You're the CEO of EtherFi, a decentralized Ethereum liquid staking protocol launched about 5 months ago. Liquid staking allows people to stake directly on a proof of stake network like Ethereum and get a liquid staking token, which provides access to liquidity while the user stakes. Liquid staking is gaining traction. So I'm wondering, generally speaking, why do you think it's important and why do you think people are interested in it?
Yeah, liquid staking is a really essential part of the Ethereum ecosystem. So typically when a user stakes on Ethereum, they need a lot of capital to do it based on prices these days. It's about $50,000 to $60,000, and most, average people don't have that much Ethereum available to stake. And further, when you stake, you're locking up your capital. So in other words, you're not actually able to then use your Ether as collateral to borrow or really to do anything else with it. So what liquid staking does, it is a smart contract protocol. It allows you to deploy.
Unless you're on Coinbase, then you could then you can actually convert into convert your stake ETH into regular ETH and use your money that way.
Types of activities.
So clearly, there is one very dominant liquid staking protocol out there. According to DeFi Llama, your protocol now has more than $34 million in total value locked, meaning the overall value of crypto assets deposited in the DeFi protocol. But your biggest competitor, Lido, has more than $14 billion. That accounts for about 25% of all staked ETH in existence. It's important to note that Lido has been around since 2020, while your protocol just launched in February. But I'm wondering, what is your plan to compete?
Yeah, that's a great question. So Lido, of course, is the dominant player. They're by far the largest staking player in the world out of both liquid and non-liquid staking options. There's certainly a huge first mover advantage. We actually haven't launched. We only launched our customer-facing staking option this week. So although we announced our existence a few months ago and allowed people to kind of pre-register their deposit, which is where the 34 or so million comes from. But the actual staking mechanism only launched this week, and we saw a tremendous amount of demand. The retail-facing portion of our protocol is called.
All right, I don't care. Enough of that. What else did they talk about? Liquid staking, yada, yada, yada. Okay, cool. Whatever. That's pretty much it. Wow, that's a really long section there. Trying to get some marketing, eh? From Ether.fi. Calls the first ever NFT collection backed by staked ETH. Ordinals are still looking pretty good. Growing interest. Take care, crypto paper route. But yeah, I'm going to get out of here. You guys have yourself a good day. The stream is way behind. Go watch some Red Panda mining. I'm going to record some content. Got some, for some of you the 19 of you that stayed behind, or maybe less by the time this actually gets to you, I got some secret sauce coming. So stay tuned. That's all I got to say. Stay tuned. Secret sauce. See you. Do me a favor on the way out. Hit the like button. Make sure to get subscribed. Hit the notification bell to stay up to date. As well as check out some links in the description. Help support the channel and what we do here. And you have yourself a wonderful day. Too much coffee. Take care. I'll catch you next one.
The MeterBox and Octominer are teaming up for another exciting giveaway. Win the latest proof of useful work, Octoserver E10, and X8 Ultra Plus and more. Introducing the limited edition Octominer Box Set by MeterBox. It includes the 125-volt and 250-volt meter boxes, a special NFT, stickers, and a keychain. Hurry, only 250 box sets available. Visit themeterbox.com now to secure yours today. Purchase the Octominer Box Set and unlock a secret code for 1,000 entries. Plus, earn an extra 1,000 entries and receive that collectible NFT. Don't miss out. The contest ends July 30th.